Hello, can you hear me now? Hello. I think the sound. Yeah, good. Okay. I'm sorry, guys. I'm sorry. So okay, so we are back. So I will start again with the dollar index, right? So what we are seeing in here is basically that the dollar index on the beginning of the week took out the previous day's low, then the previous day's previous week's low, previous day's low, reacted on the order block, and then it's moving higher, right? So yesterday the price was ranging in here, and I was thinking about taking a long on the euro and pound, but I was unsure until this level was taken out. It did not happen, so we didn't get any proper move. And as we can see, the price is going to take this level out right now. So where could the price go right now? In my opinion, we will see that it will most likely come into this above this high, right? But I'm not definitely gonna take a long here. What I would like to see is taking a long on after taking this previous day's low. So what I will be doing here, I will simply do my thing, which is on the 1 minute taking the setup after taking this liquidity out, right? So, but what I will need to see is definitely this being taken out and then some break of the structure, right? Retest and then the price moving lower. So that would be a good signal for me that on the euro, after taking this previous day's low, or retest of this month high, we could go up, right? So the dollar definitely will be the main thing to tell me what if that is correct. So what can happen in here, and I have seen that is happening many times on the lower time frame, price breaks lower and it's still doing these waves, right? So once we get this higher, the break of the previous this high, so once we get to the higher high and high and we want to enter on the higher low, but this must be confirmed on the dollar, and the dollar has to be in the level, right? So until the dollar takes this out and start to creating lower lows, the entry on the euro is still not valid, right? So that's for the euro and dollar, and same for the pound. Yesterday we have seen this on the pound. Actually, we've been talking about it on the live stream. Someone was asking where the price could go, if it can go higher. Uh, yeah, I was saying that it could, but I would not be definitely taking along here, waiting for this previous day's low taken out, right? So that happened and price went up, but I was not taking this trade, as I said, because the dollar was not clear for me and it was ranging. So I didn't take this trade. Right now, we have these two lows in here, which is definitely liquidity. So price will easily come here, right? If taking the long in here will depends on the dollar, right? So that's for the intraday. So it's a euro, pound, and the dollar. And right now, I want to show you about this setup actually in here, where I draw these schematics. And I actually was saying this when my microphone was not working. So, what I prefer more is trading the outside the liquidity, right? Like we have the internal and the external liquidity. So we can see it in here, right? So every week we start with some range. So it's a previous week's high and previous week's low. It's our range for this week, right? And taking a trades inside this range, it's basically, I don't want to say stupid or something like that, but in my opinion, it's a lower probability. And or let's say it this way, I basically feel more comfortable taking trades outside than inside, because here inside, yes, we now can speculate that the price will retrace down here and will go out. That could most likely happen, right? But here inside of this liquidity, we still have a room to go, too much, or maybe just going something like, higher, lower, higher, and then, the markets can do all these things. But outside of this in liquidity, which is the external levels, I see much bigger probabilities for the setups, right? So let me show you here on this example of the pound NZD. So what we got here, we had, let's pretend that this is a previous week's high, right? So we had the previous week's high, which can be formed any day, just the previous week's high. So it can be formed, let's say Tuesday, then the price could be ranging rest of the week, and then this week Monday we have opening and the price breaks through it, right? So previous week's high has to be broken up, right? Then that day which this previous week's high broke up, we have created uh, high of the day. Let's say it could be a Monday high, right? So then next day on the Tuesday, this Monday's highs is a previous day's high. And when this is broken and price is coming into the higher time frame level, which could be the order block, the gap, or it could be just the round numbers, which is like the numbers ending with the 0, 25, or 50. Like here it could be like 1.945, right, this level. And then then we are looking for the break of the structure and the following things, right? So just to repeat it, so we want to see break above the previous week high, right? And then we want to see break above the previous day's high, right? Then we are looking for the, so once this is broken, right, then we have this previous day's high, then price can be ranging somewhere else, it can be moving lower. Still I'm not interested because here is still this high. Then it can make sharp move higher, and then we are looking for the break of this structure, right? So once we are in this moment and we have this break, that's a signal for us, right? So let me show you. So here we have this break of the structure, and then we are looking for the pullback. I will delete all this, right? So I will draw it again. So we are here, we have the break of the structure. Then what we need to see, we want to enter on the pullback of this swing which created this break, right? Where we want to enter, we have a couple opportunities. We can draw the Fibo, and we could be looking, this is the range and this is the 50%, right? So let me highlight this. This is a 50% correction. So above this 50%, above this level, we are looking for the gap or the block, and there we want to enter. And what is even better is if there is some kind of ranging and there is some highs which would be taken out, right? Because if price makes this break and then it makes a pullback which is not 50% but lower, and start to break slower again, something like this, it can even break lower again, then here will be a liquidity above this, and above this 50% we are looking for the entry with the stop loss on the top. We don't need to do anything like this, like leaving a gap or a room, just put stop loss above this. If you are then even more sure, you can do it like this, but even I don't like to do it. So stop loss just above it and looking for the 1 2 3 risk reward, right? Or even targeting where is to the level where is the this equal highs, like this support, right? So targeting this support because it's a sell side liquidity, and then there is where the market price will most likely come. So it can be a level above the 50%, or even make it even easier, we can go to the 61.8. Let me delete this. We can be looking on the 61.8 Fibonacci retracement, right? On the top is stop loss, then looking for the 1 2 3 risk reward, which is even here, right? But of course, then we can be taking trade like this, but what I suggest is 1 2 3 taking the profits, right? So this is a pattern which repeats quite a lot, and I will show you right now here on this pound and ZD, because I was looking at this actually yesterday. So let me show you. So what we have here, we have previous week's high, right? This is a previous week's high. So price is breaking above it, right? It's in the date, it's in the 13th of the September. So on the 13th of the September, price breaks above and it creates the high of the day, right? So here is the high of the day. Then on the 14th, we can see that the price is breaking above again, breaking above this previous day high, because this is the high of the 13th and we are breaking above on the 14th, right? Then we are looking lower time frame, price is going higher and you can see it's hitting round number level, right? Doesn't has to be. If you look left on the price section, there would be some probably some levels, but what we can see in here is this is a 193, right? So you can see 193, it's this level. Then what we look, we are tracking, once this previous day's high is broken, we are tracking the break of the structure, right? So where is the break of the structure? We need to see the break of the latest level where the price made new high, right? So now we are tracking here. So does we have the break of the structure? No. Here, no. Here we have the lows, price is going higher, right? Then we got here another low, price is going higher, right? And then what we have, let's go 5 minutes. Let's go 5 minutes, because and then we have this latest high and price going higher, right? So we got the break of the structure in here. The price is breaking lower and we have the gap, right? So this gap, when this gap happened in here, this strong rejection, the price actually is telling us that it's gonna be, it can be strong move. So then we are looking for this 50% pullback or the 61.8. So we won't see a level above this 50% after this break. We won't see a level above this 50%, which would be this one. So we can be taking a trade from here like this. Or we can use the Fibo, which is simply like this, not even taking any difficult things about what is the order block or these things. So we got the break, then pullback 61.8. 61.8 is entry, stop loss here, and then you're targeting this, right? So, and this is actually happening everywhere. So if we go, let's say pound, actually it was here on this pound as well. So we can see it. Let me show you here. We actually had, let me remove this. let me remove this. So we have the previous week's high broken. Then we had that day high, right? And then it's broken up again. And then, here is on the smaller time frame break, and price go up. But it was on the news, so it was not possible to take this trade. But just for the example to show. So let's look here on the Euro NZD. I think it was here as well. Let me show you. So here we had the previous week's high broken, previous day's highs. Where is that? 12, yeah. So here we have the previous week's high broken once, but you can see that the day that broke through this previous week's high, that was not taken out, right? So it was 12th, 13 going higher, and then we got again the break, right? And 14th, the price is taking it out, and then on the lower time frame we can watch this, right? So we have the break, and then here is this pullback, right? And here should be the entry, right? So now it's because now you might thinking, right, he just founding it, but look at this. If you actually see where was this break of this day's high, and you tracking for the break of the structure, you will actually get you will actually see that here was not the break of the structure, right? Because if you follow these lows, you will actually see that the low was not broken. Right? You see it's not broken until it happened here. Right? So of course need to train your eyes and practice, but I think this is a high probability setup, and this is what I like to see around all the pairs. So for me, as I'm saying, for me, trading the internal liquidity is for me more difficult than this external, right? So, but once the external liquidity is taken out, then we can guess that we will most likely see this, to the another external. And what is even the best thing you can do is you need to have your long-term bias. So let's say you are bearish on the pound, and then you're not taking these counter trend trades, but you're waiting just for the external liquidity, and then you entering with the longer time frame, right? Okay, my friends, so this is it. So for today, it's let's see what's gonna be happening, right? So we are watching this previous day's high on the dollar, and let's see what it will give us, right? Here is the previous day's lows on the euro. So we will get some pullback trades. All right, so this is it, my friends, and I wish you have a great trading day. Bye bye.